Market Outlook, Calendar Week 33. The past trading week, Calendar Week 32, was marked by a combination of stability and underlying tension in the international financial markets. On the macroeconomic side, there were no major surprises, yet much could be read between the lines. In the United States, talks with China were in focus, particularly regarding the possible expiration or extension of the tariff moratorium as of August 12th. At the same time, the US gross domestic product showed a positive trend, while the core inflation rate at 2.8% came in slightly above expectations. For the US Central Bank, this is a signal to keep interest rates stable for the time being. For the markets, however, it is a reminder that inflation is under control, but not yet fully resolved. The US Leading Economic Index, an early indicator of economic development, recorded a decline of 0.3% in June, falling to 98.8 points. This development points to a cooling of growth, with an annual forecast of 1.6% for 2025. In the crypto market, the same period showed a notable shift in sentiment. The Fear and Greed Index moved from a neutral value of 53 to 69 points, clearly entering the greed zone. This change signals a growing willingness to take on risk, even though the first signs of overheating are beginning to appear in the background. At the same time, Bitcoin dominance declined slightly, fluctuating between 57.5% and 59.2%. This is an indication that capital is flowing more into altcoins, a typical pattern in phases when investors are prepared to take greater risks. Looking ahead to the new trading week, Calendar Week 33, several macroeconomic events come to the forefront, with the potential to move markets significantly. On Tuesday, the US Statistical Office will release consumer price data for July, both the headline index and the core index. These figures will be decisive in determining whether the narrative of declining inflation can be maintained or whether fresh inflation concerns will unsettle the markets. Already on Wednesday comes the final consumer price index for Germany, providing guidance particularly for the European market. Thursday's agenda features the US Producer Price Index, an early indicator of inflationary pressure at the corporate level. And finally, Friday will bring US retail sales for July, a key figure for assessing consumer strength and overall economic momentum. For the crypto market, this sequence of events means that we should expect heightened volatility, especially around the release of US data. Historically, Bitcoin and Ethereum have often responded to unexpected inflation numbers with quick and sometimes sharp price movements. Altcoins, which are even more dependent on market sentiment and capital flows, may react disproportionately, both upward and downward. The current sentiment picture, with the Fear and Greed Index in the greed range and a slightly declining Bitcoin dominance, suggests that many market participants are seeking additional return opportunities. However, it is precisely in such phases that the risk of exaggerated market moves increases. Against this backdrop, our trading systems are configured to respond flexibly to changing market conditions without taking unnecessary risks. During periods of expected high fluctuations, such as around CPI or PPI releases, the focus is on adjusting trading signals to market volatility. Automated processes are reduced where necessary to avoid entering positions in turbulent phases that do not align with the current risk appetite. At the same time, the goal remains to identify and make use of market opportunities, with risk management set to keep overall exposure within safe limits. This ensures that the approach remains consistently focused on stability and security, while continuous market monitoring makes sure trading activity can take place whenever conditions are suitable. Quantum data analytics. Analytical, strategic, innovative, quant-dar.com.